Cool. We are live. Let's wait for everyone to slowly join to kick it off. Today's an interesting one. We'll not be talking about like how Enflux can be the market maker. Of course, we'll slightly pivot it that way, or anyone else will actually talk about it. Can you be your own market maker, and is that a sensible thing to do, and why not, or why would you, and then what are the options out there? We'll really highlight which markets would actually be great to do your own market making on to reduce costs. And for what type of project is applicable, because it's not really applicable for the bigger guys out there and would recommend it. But if you're a little bit smaller, or you're on, let's say, some tier 3 exchanges, want to bring down the cost, this could be a good option. And actually, the first client that we ever had at Enflux, we taught them how to be their own market maker while we actually did their primary market. And that's, I think, also a valid setup, which we'll be talking about. Get a professional market maker on your main market, the one that drives price action, etc. And you can do self-service market making by yourself on the tier 3. Of course, a lot of bells and whistles around it, but that's what we'll talk about today. At the end, we'll have a little teaser for a new product we will be launching in this year, which is actually around self-service market making and how that would work. So again, if you're tuning in, welcome again to another webinar, Owning Your Token Market, In-House Market Making. I'll give it another 1 minute, grab a drink, and then we are good to go. While we're here, I'm just gonna talk a little bit about follow me on X. I'll be talking a little bit more on it. I know I'm not too much on it. Really where I'm talking a lot is on LinkedIn. Follow me on X as well. Follow the company page on X. We're way more active there with updates on what we're doing, giving opinions on how market making needs to be done, and teaching you guys on what the landscape looks like. YouTube for these type of webinars, podcasts that we do with other people, for example, Tony Drummond or Anton Golub, but also shorts are on here. And then really where we're mostly active personally, me and Valentine and the rest of the team is LinkedIn. So give us a follow. Cool, let's get started. It's gonna be not a session that's gonna be too long. Feel free to drop questions in the comment section on LinkedIn and on X, and we'll answer them at the end. What we will be talking about today, so can you be your own market maker? When and when not to do your own market making, depending on the size of the project and the complexity of the markets, how to actually do that, and then a concept which I call kind of like outsource in-house market making, which is, I think, a principle that we deploy at Enflux. And then I have that little teaser for you guys on a new product we'll be launching later down the line. So again, I'm gonna repeat it because this is the essence of what we do. Like the goal is to create a healthy, long, sustainable market with solid products around it, right? And I don't care how you do it. If you do that by yourself as a market maker, or you hire a professional, or you have 1 million guys hired that click buttons all day to provide liquidity, whatever creates the best quality liquidity, I'm all up for it. And be your own market maker is actually one of those. Because what we don't want is charts that go up and then go down continuously. We want healthy, sustainable markets that continue to grow and have a nice price trend. I think why this is so important is because we are seeing these type of events happening with market makers before, that I understand that products are like, hey, I don't trust these people. Can I be my own market maker? Or I want to really control what my token is doing and keep that in my own hands, rather than outsource that to another party, which I don't really trust and don't know what they're doing. One thing that is important, of course, you get good quality liquidity on the book if you do it yourself. And that's all we'll be talking about today as well. Why would you do it? Very simple. You want to reduce costs. That's one of them. And the other one is control. And I have 2 examples of how other, projects have actually done this for both options here. So a little breakdown of why you can and cannot be your own market maker. And then I got a little icon here of the software that could be used. And the story is also that our first ever client at Enflux is someone we taught how to be their own market maker while we were handling their primary market. And that's a setup I could recommend to some project. We were active on their DEXs and MEXC, which were the markets that had most amount of volume. And then they were doing LBank and BitTrue as a secondary market making themselves with more simple strategies that were just dependent on whatever happened and we did on MEXC basically. And that was a valid setup because therefore they could reduce costs significantly because we didn't have to be active on MEXC, which was a great solution for them. You can, because there was an open source software called Hummingbot, and the markets that they were active on were low volume. So there's not too much happening. You don't need to have a lot of expertise. There were no manipulations on these markets, and we can pick the markets where it would easily work versus the ones where we wouldn't recommend it. Well, the downside for them was, and that's the cost-benefit trade-off that they need to be making, is, well, they didn't have 24/7 support. If you really want to be your own market maker and you want to do it on big markets, well, you need to have good people on there that can actually do 24/7 support or are quant traders or developers. A good example is Animoca Brands. They have their own in-house market making for all of their portfolio projects. Well, they have a whole team for that. And it's possible because they have 100-something portfolio projects that they could do market making for, where this starts to make sense. You need to have deep understanding of the algorithms. Market making is not easy, and I'll go into the pitfalls in a little bit as well. It's not feasible for your primary market unless you have an expert team, and it's expensive to develop as well. So whether you can be your own market maker, actually, I created some flow chart on like when it actually makes sense, and it depends on the amount of liquidity you want to provide, and then what type of market you want to provide things on. So in my opinion, you shouldn't particularly do your own market making with simple software if you are providing more than 7.5K on the book. I would maybe even say anything above 5K is going to be questionable if you're not an expert. If it's less than 7.5K, the question is, well, are you market making your primary market, the market that is actually leading price action as most of the volume? If it's not, I think simple self-service is possible because you don't want to be on your primary market. There's too much risk involved. It's too important. If your systems go down and the market becomes illiquid, it could really start to drop price, etc. You need that stability for investors. If it's like the example for our first client that we ever had, we do MEXC and they do LBank and BitTrue, for example, I think that's a valid setup because it's not the primary market they're market making on. If it is your primary market, like what I think is important, you can still do it, but you need to have an expert on the team that is able to work with the software that you guys are using, or they are able to develop it themselves, right? But then you go into like the costing. You need to hire someone worth 4 or 5K a month minimally in order to run these strategies for your token project. For 4 and 5K, you might be able to get a market maker as well, right? That's the cost-benefit trade-off. You could do self-service, but it's not without risk, so to say. If you don't have this, I would not recommend a self-service market making model for a project that is providing less than 7.5K, but is on a primary market that is too risky. I'll go into the reasons why later. If you're providing more than 7.5K, like we skip this primary market conversation, you need to make sure that you have a quant dev available that really understands the trading strategies and actually deploys them. Again, you can do it yourself, but it is again with risk, and I'll outline those later. If you're not having a quant, like don't go and provide 7.5K on your market. It's too risky. There's manipulation having every single day that could, destroy your market. So what do I mean with this as an example? Primary markets are markets that are leading the price discovery most of the time. It is the price anchor, and I think therefore it is the reason a professional should handle it. If you allow price to drop significantly because your systems are not there 24/7 or you don't monitor things, you would have a serious issue if there's manipulation happening, huge amount of selling pressure if you don't know how to handle or quick enough. What I would recommend is use a self-service solution on secondary markets. For this specific project, I would say the primary markets are 3 markets. One is definitely Raydium. that is an AMM, so you don't need a market maker there, really, right? Then MEXC and Gate could be self-service because Raydium has so much liquidity that's really the price anchor that is still good. You could therefore decide to use MEXC and Gate with some kind of like open source tool or do it yourself together with XT, which is a no-brainer to do, and provide up to like 5K liquidity. And that's not without too much risk. But there's a huge downside to it by doing this because the strategy will be very simple, and I'll explain that in a bit that you could deploy. Because what could go wrong, or what are really the things why you hire a market making professional rather than actually doing it yourself? And I think the biggest one is the manipulation. There are algorithms out there that are probably looping through every single market, testing specific things like pushing price up and down, and then down again and up again, to see if they can manipulate a market making algorithm that is stupid enough to just follow their course. And therefore they can very slowly start to drain markets. These things happen continuously, and if you don't know how they work, or if your algorithm is too stupid to understand that that's happening, you will slowly be eaten up. The other problem is that you don't have the analytics to see what is actually happening if you're just using some off-the-shelf kind of like product out there. And ideally there is some kind of analytics involved, but most often it's not. So you lack the visibility. The other thing is, if manipulations happen, which happen all the time, you have no 24/7 support to actually see what's up and actually move quickly. The other part is inventory management. You need to have a deep understanding of how to manage that, because if you run out of dollars, you need to understand, how do I get dollars back so I can always continuously provide dollar side liquidity. Things around like price mechanics and like how to provide proper support to tokens, the complex parameters around that and calculations. Again, you can do simple stuff, but really when it goes to really managing price action to a certain extent, I'm not talking about manipulation, but at least providing solid support for a price to have a healthy market, that is quite complex. And the last one is really the losses that come with anything above, right? And primarily, manipulations. You need to understand how to trade this delta neutral or somewhat at a slight profit, and not lose a lot of money. Without clear analytics or without having things against these manipulations, you'll have a serious issue, probably with P&L as well. Adding that to, you need to hire someone, you need to develop a system, you need to run it yourself, and you have costs around that, and losses are probably worth the market making expenses, right? And that's why people really hire a market maker, because they just fully take care of that part. This is a very small example of some manipulations that are happening, continuously, right? Like you see price going up and they're slowly trying to like push it up and down continuously. Stupid market making algorithms will update their orders, according to where someone wants price to move, in that case, and therefore continuously, selling high, or like buying high, selling low, buying high, selling low. And these are tiny profits that are, these manipulators are trying to like get off the markets. But if you do it over enough markets with enough capital and fast enough, like you slowly start to drain accounts of clients and of projects, and that's where they make their money. And you need to really understand these things. Outside of that, there's other type of manipulations, right? Small like pump and dumps that are happening where price is following. You have things like MEV attacks on the DEXs as well, which if you don't have a good fair pricing mechanism in your algorithm, it will be hard to manage that. So an example on how it would work on a secondary market, right? Like you have your primary market handled by a market maker, or it's your anchor with a DEX, as you can see here. How do you do market making on your secondary market with your own systems or whatever? Like a simplified version that I would say is valid enough. It's not the best you can get, but it's a good trade-off between reducing cost and also maybe having less quality liquidity sometimes, or visibility, right? So in this case, Raydium is by far the most liquid price anchor, so to say. You could therefore do market making on XT, Gate, and MEXC yourself with I call it kind of like a price following strategy. What that means is you basically say, I place liquidity and have an algorithm that continuously refreshes orders and managing inventory based on what the radium price does. If radium price goes up, I adjust my orders as well. If radium price goes down, I adjust my orders as well. That is valid enough to put anywhere between 0 to 5K of liquidity on the book yourself with simple algorithms. There are still big risks, and there's a huge downside to this, which if you work with a professional market maker often doesn't happen, is that either by having a more complex algorithm on Gate and MEXC or with some kind of hedging or arbitrage strategies, if you have a simplified strategy, the trading activity on Gate doesn't reflect over in all prices. What I mean with that is that if Gate, there's like 100K in buying activity happening, price would not move up because you simply reference the radium price. In professional market making algorithms, you allow at least price to then slowly move up. Arbitrage will fix everything and the whole market will slightly move up. And therefore, Gate activity is translated into the overall price of the asset. Off the shelf, I think, or self-serve market making algorithms that don't really have these type of features in them. And I think that's a huge blocker that, of course, you want, if there's a lot of buying activity in one exchange, you want it to translate into the whole price rather than only, that. But this is a valid setup. And this is actually something we have done for the other project where we were taking care of Radium and Gate, and they were doing, let's say, in this case, CoinEx and XT themselves, which was valid. They just referenced the prices that we have set in the activity. We made sure that the markets were efficient. All the buying and selling activity was translated into the whole price, which is good. And they just made sure that there are less markets with not a lot of volume. They were actually following the price as well. So this is for smaller market making where you can reduce costs. For the bigger markets, like the reason to do it is you want more control over the token and what is happening. You don't want to give that away. So what about the large market making, doing it with like a self-service model or an own algorithm that you build? It can work, but you need professional traders and quants. I think depending on the amount of markets, you need one of each minimally, and then you don't have 24/7 support. Ideally, you need a support team, so you need 2 traders to have like a bit more 24/7 rotation. Analytics and learning, I think, is super important. And if you're the top project, you need very latency optimized systems that are fast enough to not get taken by other market makers on the market. So I think the question is it worth the cost? Well, a good example is Animoca Brands that I mentioned before. They have a lot of portfolio projects. They have their in-house market maker, and I think they offer it to some external parties as well. For them, it made a lot of sense to do, because if they did it themselves, they would, save a lot of cost for the portfolio projects or get in more money for themselves, while they also kept a bit more control of what happened with the token, so you don't have to get into bad deals. Well, they have the capital and the team and everything around that with support, traders, and quants in order to do this properly, which is great. But unless you're a very big project, it's going to be hard to really get that done. And then I still feel like the cost-benefit trade-off is not profitable in terms of like doing it yourself. Again, this is going to be a short session, so I hope there's going to be a lot of questions as well. But I want to kind of like explain a concept that I think that I believe we have within Enflux, which is outsource in-house market making. And what I mean with that is you ideally want a team. If you outsource it via another market maker, you ideally want a team that works as if they're in-house. What I mean with that is that it's good collaboration, weekly calls to share market insights on what is happening, so the project can make good decisions. They know which exchanges are good, which exchanges don't have a lot of volume, where's most of the liquidity going, how balance is developed. Have we seen buying and selling activity over the past week or not? So they know everything that is happening. So if the CEO that understands, like, yeah, we've done a lot of marketing last week and the numbers improve, that they can start to see and understand correlations within that. I think strategic planning with liquidity is super important, especially during launch. We cannot just launch with whatever you give us. It's like we got to be involved in the whole planning process. I think align marketing product development. What I mean with that is if you do announcements on marketing and you've developed certain new features, that you align liquidity properly. So if there's a lot of buying activity, either able to liquidate or price could increase slightly more efficiently depending on what they want. And I think therefore also proactive rather than reactive market management is really important. Market makers, in my opinion, shouldn't be a standalone component. They should be somewhat integrated into the team with weekly calls, and it's like an in-house trading team. With that, as well as the dashboards and analytics, like the product needs to have access to it as well. That if they need to make quick decisions, need to check something that's happening, hey, what do my balances look like? They have it at their fingertips. They don't have to ask you all the time. So I think that's really good. So the concept outsource in-house market making basically means you still hire someone else, but they're almost acting as if they're in your team. And we are building a solution for in-house market making where you can do it yourself. Really, the reason for this is not so you can have control. I really think for the bigger projects, they need to use an expert, and that's what we have for. But it's really to sometimes save on market making expenses whenever you can. So who is this for? This is really for the people that wanna save on cost by letting an open source like an algorithm or a service manage their secondary markets or smaller markets or small primary markets, where you still have that full visibility with dashboards and analytics to actually do that with alerting to you guys so you understand what is happening, and to a certain extent still complex enough strategies to tackle manipulation that is built by someone who really understands the market. So complex strategies brought down to a handful of simple parameters that the project can understand to manage their own markets very well and simplify it at a lower cost than hiring a market maker. This will be launched somewhere this year. We're working on it right now to have a proper interface. And I would say that if you're interested, we have a wait list. I would say scan this. We are running some beta testing as well on this. So for projects that are really interested, I would love for them to get in. We can ask for some feedback. We'll work on it. It's going to be in here free for beta testers or free at all, to make sure that we actually develop the right tools and parameters and work with them and get some feedback on how it's going. So I think this is exciting. I don't think there's a lot of projects out there. There's, I think, one of them that we have seen that smaller markets are using, but as far as we know, it's not as complex as it needs to be to manage, really a little bit more tier 2 secondary exchanges as well. The downside as well is still like you don't have the full visibility with that tool, and that's really what we're trying to solve. This should be a place where you can also get educated enough on how to manage your markets to a certain extent, where really still the goal is to make it a product that is still delivering quality liquidity, but again, at a low cost for the project itself. And this should, in my opinion, make launching a token a bit more accessible. I still don't think launching a token is for everyone, but if you do, you don't have to spend a $4K a month for a market making retainer. We're looking at more like a $500 a month retainer for a self-service market making, which would save you quite a lot of money on market making. We just scan this one. Little shilling, and then we go to some questions. We have an awesome Telegram group with a lot of listing managers and people in communities where people connect with each other, which I think is great. We have a partner program to earn commissions on referrals for OTC and market making. For VCs and institutions, we're collaborating on big OTC deals recently with VCs and institutions, and we do their liquidations. We do audits for their portfolios and master classes. Same for exchanges, helping them grow in more like a partner program, providing liquidity there and funneling. If it's a good exchange, at least with good terms, we're happy to funnel a deal flow to them in terms of projects. And I think for projects, the biggest one is small and big OTC deals. Like it goes from like daily deals between 2 to 5K to $1 million ticket size. If the product is really is big enough, liquidity audits, trials, free listings on exchanges, and things like tokenomics reviews. That's what we'll be looking at. So if you're one of these, would love to get in touch. here are my handles. My Telegram is B_Yella, so definitely shoot me a message. For now, I would love for you guys to put some questions in the LinkedIn and also on X, and I'll answer them in the call here. I'll go to Slack to see if there's any questions there. And then I'll also check the LinkedIn one. Cool. I think no questions for this one. That's all good. If you guys do have any questions, you can always send them to me personally via the socials, or actually send them to our email as well. I think that's it. Thanks for listening in this time, and we'll see you in a month. Ciao, ciao.